How's it going, STG community? Today, we're going to be speaking about the hypothetical mortgage payment that you would pay when you're actually underwriting and searching for a property. So you don't have to continuously go back to your mortgage loan officer and ask them, hey, what would my mortgage payment be if I bought this property? And they'll probably be super annoyed at you after you do that like 2 or 3 times. So go to mortgagecalculator.org first and foremost. This is a free platform, mortgagecalculator.org. It's a free website. And what I'm going to do, you see here, we're going to go over home value, down payment, loan amount, interest rate. So I took a random property. This is $539,000. All you have to do is plug and play. So type in $539,000. Put in whatever down payment you're gonna put down. So if it's an FHA loan and let's say you're putting 3.5% down, put in 3.5%. The loan amount will always automatically change for you. So let's say it's an investment property, you're putting 25% down, this is your loan amount. So let's stick to 3.5% down for these purposes. So you see the interest rate here. That fluctuates every day, every hour. So the interest rate today is around like 6.6 to 6.7%. So let's play conservatively at 6.7%. If you don't know what the interest rate is on that day, just ask me, or you can actually just research it, type it in Google. It should tell you the amount. But once again, interest rates also fluctuate from mortgage lender to mortgage lender, from company to company. So obviously work with the correct mortgage loan officer for this. And also, as I'm talking about this, be on the lookout for any hidden fees like application fees, points, any of those fees, because those do add up and you might not realize you could be paying a lower interest rate, but you have upfront fees that don't make sense, not enough to have that lower interest rate. So be on the lookout for that. The loan term, 30 years. This is usually the standard, so keep it at 30 years. If you're taking out a loan that's 15 years, I would not advise that, because you can still just do a 30-year loan and just pay off the principal to make it a 15-year loan, and I'll speak on that in the future. You can do like 2 payments a month, or you can just put money towards the principal only. And once again, I'll get into that later on. So property tax, we have here, it's definitely not $3,000 in New Jersey. Just scroll down here, and what you see, I'm using Zillow. You can use any website. Zillow is it's just always used, but it might not even be the most accurate in terms of these estimates. The property tax is $8,222. So I am plugging and playing. PMI, this is your mortgage insurance. So for an FHA loan, this is called actually an MIP, mortgage insurance premium. But if you put down anything less than 10% for an FHA loan, if you put down anything less than 10% for an FHA loan, this will stay for the life of the loan. But if you're putting more than 10%, what happens is once you reach enough equity, 20% or more, you can just call the loan officer, call the bank, call whoever services your mortgage. Who services your mortgage? Did I say that right? Yeah. Whoever services your mortgage, call them and let them know you want that taken off because you paid 10% or more. And honestly, if you are going with, let's say, a 25% down, this doesn't even exist, because once you have 20% or more, your PMI does not exist. You can factor that out of the equation, which saves you money. And I'll make a video on PMI and MIP as well. So the home insurance, this is your homeowner's insurance. In New Jersey, I'm gonna just give you an example. So for a property like this looks renovated, this looks done up. You can ask me as well. The home insurance should be at around, let's say, $2,000 to keep it conservative. My guess is you can probably get insurance for around $1,800 for something like this in this location, in this condition. And all you have to do here is click buy. Your loan type is conventional or FHA, or VA or USDA. So for these purposes, once again, FHA, and you hit calculate, and you'll see this number change. And there you have it. That's $4,424.87 payment with PMI. So that is going to be your expected mortgage payment every single month. That includes your PITI, meaning your principal, interest, taxes, and insurance. PITI, principal, interest, taxes, insurance. Just a fancy name for a mortgage payment. That's your mortgage, PITI. And that's essentially all you need to look at right now. Don't overcomplicate it. Don't overcomplicate it. That would be your mortgage payment. So you can see if it makes sense or not. I'm going to give you an example here. Once again, if you put 25% down, the same interest rate, what you're going to do here is change your PMI to 0. Because with 25% down, once again, if you have equity of 20% or more, you will not pay an insurance premium. So 0%, put that there. Loan type, let's say this is a conventional loan at 25% down. Everything stays the same, remember that, because the interest stays the same for that day. And your property tax and your homeowner's insurance, that stays the same. I just want to show you what 25% down looks like versus what that 3.5% down looks like. So you have $4,424. Keep that in mind. Calculate. So you see how that changes your monthly payment? $3,460 would be your mortgage payment. And obviously with interest rates, let's say interest rates go higher to 7.5%. Once again, keep this in mind, $3,460. Interest rate is 6.7 to 7.5 right now. That's the change that we're doing. And we'll see that 3,460 is now 3,678. So you can see that it's gone up $200, around like $220 more just from that fluctuation in interest rate. So keep an eye on that. That's simply how you calculate your mortgage payment, the estimated amount that you would pay, and obviously the lender is going to tell you exactly the exact amount that you're required to pay. So this is a quick hack. Hope you enjoyed it. Hope you loved it. Hope to save some time. Do your underwriting, and we'll go over some more in the meantime. Take care.